Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index has rebounded to near 97 after 3 consecutive days of losses, supported by stronger than expected US jobs data. January non-farm payrolls rose by 130,000, while the unemployment rate unexpectedly dipped to 4.3%, signaling that the labor market is stabilizing in early 2026. That data has prompted traders to scale back rate cut expectations. Markets now see the next Fed cut in July instead of June, with less than a 5% chance of a March move. WTI crude climbed back towards $64.80 on Wednesday, reversing the prior session's losses as escalating tensions between the US and Iran supported prices. Reports suggest Washington may consider intercepting Iranian oil shipments and could deploy additional carrier strike groups if nuclear talks collapse. Markets are also watching today's OPEC monthly outlook, with the International Energy Agency set to release its assessment on Thursday, warning that global supply could exceed demand this year. Spot gold is trading near $5,070 after a modest pullback on Tuesday, as investors took profits ahead of key US employment and inflation data. Despite the short-term dip, gold remains supported by a softer dollar, ongoing geopolitical tensions, and expectations of Fed rate cuts. The $5,000 per ounce psychological level is also providing a strong support base. Since gold does not generate yield, lower interest rates reduce the opportunity cost of holding the metal, which continues to underpin prices. Yen is hovering just above 153 during Wednesday's European session, following heavy losses over the past 2 days. Traders appear cautious ahead of delayed US employment data. Interestingly, despite Sanae Takaichi's election win, the yen has not weakened further. Instead, the currency staged a sell the rumor, buy the fact move, with dollar yen pulling back. At the same time, expectations for 2 additional Fed rate cuts this year, along with renewed concerns over Fed independence, are weighing on the dollar. Euro remains range-bound just below 1.19 inches the European session as traders await fresh catalysts. Diverging policy paths between the Federal Reserve and the European Central Bank continue to shape direction. Disappointing US retail sales data released Tuesday reinforced expectations of multiple Fed rate cuts this year. Meanwhile, the ECB has kept rates steady since concluding its year-long easing cycle last June, with stronger than expected growth reducing pressure for further stimulus.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.